GDEX as an average in their index, whereas Coinpit uses it as a median. So they have GDEX in their index at Coinpit. However, they use it as a median of multiple exchanges. So GDEX price went down like crazy, but Coinpit's index didn't go nuts because it just chooses the median, which is a single. If you forgot your elementary school mathematics, it's the single. After you rank them by the size, you take the middle value.
Just a quick question then
So,
for Coinpit guy. Do you keep records, and are you obliged to pass records on to governments if they request them?
So when you say records, what kind of records do you mean?
Transactions between different currency pairs or crypto pairs.
So we do keep the records of transactions because otherwise we cannot do profit and loss, we cannot do settlements, and but we do not actually know who our traders are. So to us, the only identification we have from you is a public key that corresponds to a Bitcoin address, and that address is never really hits the blockchain unless you exercise your recovery transaction. So when you trade with the Coinpit, you provide nothing except a public key or a private key that you create, and you can create as many of these. There's no restriction, and you can fund that your account with BTC and start trading as much as you want. So let's say after a week you're bored with this user your address, or you don't like the look of the public key, it has 666 or something, or some superstition, you want something with 888, just discard it, create a new one. We keep record of transactions because otherwise we cannot actually do accounting. We cannot prove that everything is accurate. And all of that. So we need to keep that at least for some period. We also like to keep it for a while to help people who want to file their taxes properly, accurately. So we don't want to be like OK Coin and say, well, it's been more than 3 months, there's no records. For people who want it, for people who are in jurisdictions where these things are taxed, we want them to be able to retrieve their records. But can someone get those records unless there's a court order? No, we're not going to entertain that. And everything, since all money movements are on the blockchain, there's really not much they can ask us because we don't know who our traders are. We don't have any of their documentation. We don't really know anything except there's a public address that has made certain trades, and there are hundreds of public addresses that have made thousands of trades. So this is just a big haystack. There is no way. So we have made our exchange very unattractive to everyone except traders. So the government will not find anything. If you have a lawsuit or your wife is divorcing you, they won't find anything. And even if they find something, no one will be able to move the coins because you have the private key that moves the coin into a trade.
I was curious about your fee structure because I was on your site and I noticed there wasn't. I haven't found a reference to fees anywhere on your site.
Right. So I will update that right after this talk. The fee is 0% maker and 0.05% taker.
Okay, so there is no fees if you're a maker, and there's a 0.5% fee if you're
0.05.
0.05. That's what I said, right? But there. Sorry, you said 0% fee, but that no fee, right?
Yeah, no fee for a maker.
Okay.
Yeah, so that compares with at OKCoin you are opening the position and paying 0.03%, right? And there's nothing to close. And at BitMEX it's a negative maker, I think 0.025, and when you want to do a taker on there, is it 0.075? Something like that.
I believe you used to do a negative % maker fee, and you've moved away from that.
That's correct.
Is there a reason you did that? Because like as someone like I specifically am trying to look into trading on here, and you know, BitMEX offers me a maker, and to me, being a maker, just I don't know if it's a psychological thing, but it helps me be a trader. It helps me make. And on your market, there isn't a lot of liquidity, so I'm just wondering why you went away from that.
So our plans are eventually to completely decentralize the exchange, and negative numbers, it's much harder to do that, right? So if you look at all the blockchains, the amount of assets are always positive. They're positive numbers, and you can do a lot of things get simplified if you go that way. Eventually we want to go fully decentralized, and if we figure out a way to do things like negative negative assets, then we may bring that back.
All right. Well, thank you for the answer. Anyone else?
How do you, with regard to your web access and otherwise, like, what's the security methodology in that? Obviously, using public and private keys and stuff like that, but, is there any level on the back end where you're kind of logging IPs and otherwise?
All right, so the only IP we log is the IP where you first register your key. So when you first log in, and the only reason we do that is because when we if ever government wants to take action on us, like for example the US government may claim that we are offering trading to US citizens, or they may claim that they have a few US citizens in our system, we can prove that that never happened. And the way we do that is when you first register yourself on the site. You don't actually register, you just accept the user agreement. The user agreement is signed with your country and your IP, and you actually do a cryptographic signature on it, and we store that. So at this point, that information is stored. In the future, what we want to do is we want to go towards a zero knowledge proof, if possible, something like what Zcash does, so that we can prove that this was not in the US without actually storing the IP. So we don't have the math yet for that, but we will eventually go to that place.
I'm thinking about like the man-in-the-middle attacks that can occur. So it's like, okay, if you've got, you've obviously got a centralized exchange. If you've got like one node deployment, like how is, for instance, if someone attacks your server directly, do you store the public and private keys?
We don't. What do you mean, man-in-the-middle attack and private keys? I didn't. Could you repeat the question, please?
Yeah, basically. Okay, so you've got a web server, right?
Yeah.
So you got the initial Coinpit web server. Okay. Now, what does that web server do? Does it, does it obviously generates, keys for the user, but what does it store? What does it harbor? Because it's obviously deploying. So does it keep it in a reserve, or what does it do from that end?
Okay, so the user's private key is generated in the browser, and it is never transmitted. So we never have it. And if we did have it, it would be completely insecure. It just wouldn't make sense. So what we do have is, for every user who sends their public key over, we generate our own corresponding private key. So we don't have one private key that is shared among everyone. We have a separate private key for every user. And using the public key of the server, and using each other's public key, you can create essentially zero knowledge authentication, right? So the zero knowledge authentication is completely immune to man-in-the-middle attacks. So nothing else that you see today, in even with your bank or traditional financial institution, certainly everyone else in crypto, is can be man-in-the-middle attacked. So for example, if you are accessing your exchange through your work computer, most work computers have in their browsers have a certificate installed by your employer. that allows them to decrypt the SSL and do some caching and just essentially read your data. But they wouldn't be able to do it with us because we use direct we use the cryptography in Bitcoin, and we don't send session cookies. We don't send session cookies. We don't send passwords. None of that is sent. No secrets are sent. So there's nothing to capture in the middle. And of course we still use SSL, but even if we did not, everything sent is signed, HMAC signed with a shared secret that everyone, both parties compute independently. So cryptographically, it is very secure. It's we have paid people to try to break it. We are going to hire someone full time to break it in summer. Just keep trying to do it over and over. But this is well understood. This is same as your SSH protocol. It's ECDH, and it's shared key cryptography. So that is very safe. No one. So once you register, you have decent freedom to travel. I know a lot of traders travel. They trade from Thailand today. They trade from I think we have a member here in Teamspeak who does that. And so after that, we don't care about the IP. It doesn't make sense to restrict you to your original IP. So the only IP we have is the IP where you signed up from. So I hope that also answers your man-in-the-middle question. It's we've looked into that very. The site was designed to, just like in the spirit of Bitcoin, to resist the failure and the compromise of every single system. So including government regulation, cryptographic failure, like TLS sometimes has issues, with heartbleed and so on. You can actually leak information. So even if that occurs, we wanted to make sure that your account won't be compromised. So which is why we said we're never going to do session cookies. So we authenticate every single thing. Every request goes through an API, and it is. We believe it's the safest thing you have there today, and the most cryptographically secure way to trade. It's the reason we did this was not because we like to play with crypto. We do, but from the very beginning, when we started this exchange, we went through every single exchange hack, every single failure of the business, of the security, of the every single exit scam, and we wanted to create something that would not be susceptible to any of this. And what we realized is that privacy breaches lead to security breaches, and security breaches lead to privacy breaches. We did not want any of traders' information with us because that would make us a target for identity thieves. It would be a target for regulators or government to come in and try to see what they can get. It would be target for hackers to try to get our coins. So we wanted to just not hold the coins as much as possible. We don't want to hold any of the users' information as far as possible. And so we just wanted something where trades would come in, the trades would execute, and the value moves from trader to trader. That's all we want to do. Everything else we got rid of. For example, we don't have Google Analytics. We don't have everything. A lot of things we had to rebuild ourselves, including the authentication, because we wanted it to be private and safe for everyone. Yes, very good question. So about the hardware wallet, we are working on supporting hardware wallets, and what this means is not that you can use a hardware wallet to send coins to the exchange, but your private key that right now is created in your browser, you could use your hardware wallet to manage that key. So your hardware wallet will have the key, and it will not actually ever move out of your hardware wallet. So what would happen is you would, when you want to move coins, you would have to put your hardware wallet should be available, and you have to sign it using whatever you use. If it's the browser plugin, or if it's a, you press a little button on it, you do that thing, and then that is it. So you won't be able to move coins without your hardware key. It's going to come in a month or two. It'll be out. And also, one of the cool things we have is we're going to have every request made by the user signed with your private key or a signature or a ED 25519 signature, which gives you a complete audit from your entry to your execution, to your profit and loss, and all the way to the settlement. And if you look at some of our settlement transactions, there is actually a OP return value, which is the hash of the entire settlement with everyone's P&L who's included in that. And so if you trace the hashes back, just like your blockchain, you trace it back all the way to the user signature, which can only be created by the user because only they have the private key. And especially if it's a hardware private key, there is no other way that this settlement could have any bit of mistake, because it is mathematically proven to follow that chain. Then we have complete transparency without actually opening the books, reading the all of it. So we have audit standards that are higher than anything in the traditional world. We have security standards higher than any traditional world. And once we have hardware keys, we'll have total privacy. We actually do have privacy already, but you will have that security backed by physical device. That it's unprecedented. Even in the traditional world.
Is that op return feature you mentioned, is that optional? Because it might be a concern for someone to know that if correct me if I'm wrong, but if their wallet address got out, then you could just see all of, maybe you don't want them to see all of your PNGs.
No, OP return is the hash of the settlement. It doesn't actually have anything to do with it. It cannot be reversed back. It's your signature goes on your order, right? So, and it's a private key. So the order then results in an execution. The execution results in a P&L computation. P&L results in a settlement. Settlement only moves money between margin accounts, which is not tieable to your user ID, because your user ID represents your private key. So that no one will ever see unless, let's say, something happened and the exchange went down for 2 days. All the exchange people are unreachable, and you want to recover your coins. So we have a recovery transaction that you can simply broadcast on the Bitcoin network, and that will send the coins to your to the address that is controlled by a private key. That's the only time in a disaster your user ID will ever be exposed on the blockchain.
I like that explanation, buddy. Thank you so much for that. Really appreciate it.
You mentioned you wanted to decentralize the entire exchange. Like, how do you get away from HTTP and like a SQL database? Like, how do you, are you going to do a DApp? Like, what is that?
Right. So we looked at all the current attempts to do this, and the closest was BitShares, and they have a latency issue. They have blocks every 3 seconds, and 3 seconds may be a borderline. The issue with the blockchains is that you cannot do any sort of hedging, especially blocks which are very fast. So let's say you have a position open, you have an order open, and you want to hedge it on some other exchange. If this order fails, you don't actually know if it's going to be in the final chain. So what happens to the other order that you hedged? So there are, then there are also latency issues between placing an order and filling it and canceling it. So what we are trying to, we have to look at it in a different way. We have to maybe create a special coin just for derivatives trading. So derivatives, as you know, has a positive and a negative position. So the net position of all derivatives is 0, unlike the coins today where the net position is the number of coins in circulation. So we may have to create a new coin that enables us to do this, and there's still some math we need to work out. It's a paradigm shift. We honestly don't know if it can be done at this point, but that is our eventual goal, is to have a decentralized exchange that performs as well as a centralized exchange. You can create a decentralized exchange today, it's just no one will want to trade on it because the experience will be terrible. And as a trader myself, I know that I would never trade on a place like that. So we will try to solve this. We will, in the meantime, we will solve the other pressing issues, privacy, hardware keys, full audit without exposing anyone's information. So privacy, transparency, security, that's essentially what we're looking at.
Yeah, I think the problem with the shitcoin idea is that basically it becomes a massive vector of attack against the whole exchange and against, I don't know if it would be broad enough that other exchanges would want to try to use it as well for all that purposes, but it's basically only as secure as the actual hashing, the hash rate of the blockchain, right? And so if that becomes something where 51% attack becomes profitable because people can jack a bunch of futures traders coins, that becomes a problem as well, right?
Yeah, so we wouldn't, so the whole proof of work, the purpose of the proof of work is to anchor the coin into reality. So you need to back it up with the source, with something that's valuable and rare. Like in case of Bitcoin, it's energy, and you spend energy. So as long as we can find something else to back it up that's valuable, that cannot be created at will, then you may be able to create a safe coin. So we don't know what that is yet. Again, this is really research into
how fast do you think
blockchains.
a coin would a coin like this need to be in order for the user experience to be acceptable? Like what are the features that you said BitShare is just 3 seconds, or maybe Ethereum? Is there specific features beyond latency that they don't provide? Because I'm just not specifically about Coinpit. I'm interested in the idea of actually implementing a DApp like this or a decentralized website.
Right. So the requirement, I believe, is 200 milliseconds, and that's because 200 milliseconds is the blink of an eye, and most humans can perceive that as the smallest unit of time. You could probably get away with half a second. It may not be that bad to start with, and then you can find ways to make it faster. And it also needs to work on large scale. You can create anything easily between two computers in your on your network. That's very easy. You read things on Twitter. Someone did. I scaled Bitcoin. Sending so many satoshis. But it's between two computers. When it's a global network, it has different challenges. It has latency challenges that you cannot bend. So, for example, a packet takes 300 milliseconds to go from Europe to Australia, right? There's no way. That's the speed of light. There's not much you can do to break that. So I think that it will be for, let's say, for a region. So if you can isolate it in different regions, in other words, you try to match Europe first in Europe, and then only if it doesn't match, you take it out. So you could, in most cases, you could do it within 100 milliseconds, 100 to 200 milliseconds. It's just that we have to find a way that no one will be able to attack the network easily. So the security is paramount. Otherwise, and it needs to be provable. It needs to pass review. It has to run in a testnet first. And all of this it takes time. It takes some, it takes manpower. But I think we'll eventually get there, and I think it's actually not far out of reach. It's just that BitShares was started in 2011, some time ago, and the technology then and the knowledge we have was much less. Now we know a lot more. We have faster bandwidth. We have faster computers. I think in a year or two we will have something that is realistically can approach at least half a second latency decentralized exchange.
So for now, it's not not fully decentralized, but how much of the stuff that occurs on the exchange is on the blockchain? So people, if someone's just starting the site and they want to make a deposit, they have to deposit to a multi-sig wallet, and then from that wallet you have a margin wallet where you make all the trades and stuff from.
Yeah, that's correct. So right now there are 4 operations that go on the blockchain, and a part of this is the cost of blockchain, the transfers. So when we started this exchange, when I first started coding this in 2012, the cost of one transaction was something like half a cent, and you could assume that even if it's a free exchange, I mean, if it's a free no fee transaction, it would confirm, it would almost guaranteed. And our original design was everything was actually through transactions, so you would place an order, it would match, and it would it would settle, everything was on chain. But at this point it would be uneconomical. You would lose more in fees than you make in the trade. So at this point we cannot use the blockchain, we cannot use the Bitcoin blockchain for it. So what we do is we only keep the settlements on chain, and you are moved from your multi-signature account to your margin account and back. And of course when you withdraw your coins. So these are the only things on the blockchain, and this is reasonably, even if we pay a high fees, so even at $1, doing it once a day, if you're a trader, it's not that high. Settlement is once a week settlement, you don't pay anything, it's just, we pay for it. So the only thing you would pay is when you move your coins to margin account to start trading, and once you're done trading, you move it back. So depending on how much you have, you may want to move, if you have a big account, you just got out of a monster trade, you have 10 BTC, you may want to move like 9 BTC out of it if you're not going to trade for a while.
So maybe so you have to move from the multi-sig to the margin, then margin back to multi-sig to withdraw outside of the exchange, and that could be like, I don't know, $2-3 depending how much someone wants to spend in the miners fee, right?
Yeah, it could be, but the multi-sig, you could treat it as like your own wallet. Multi-sig is something from which coins will not move unless the user does an action. So for all practical purposes, it's in your control. What you should do is, once you have coins in the multi-sig, you should always make sure you have a required transaction, and we're going to automate it so that you always have that required transaction. You don't have to explicitly download it. So right now you have to download it from the account menu, but we'll automate it so that you just use your multi-sig as a wallet. So it's fairly safe. Once you use your private key, your hardware key, for all practical purposes, you are using your hardware wallet to trade it. And if you have your pre-signed transaction, you can broadcast it at any time. Once you, let's say 1 year down the line, you find a much better exchange, something else happens, you want to, then at that point you can totally withdraw your coins. You don't have to use it as a wallet anymore.
So when Lightning Network, or let's say, I don't know, in either way where the scaling could go, if there's a fork to higher block size limit, then that would help reduce fees. And otherwise, if there's a segwit adoption, which then leads to Lightning Network development that has these trustless nodes that can be run, would you be able to incorporate this into the business, or does that interfere with the plans that you have later for full decentralization?
So segwit will greatly help us because it discounts the signature space, and what we can do is we can add more signatures, we can create more complicated structures, and it solves malleability, so we can do the whole trustless thing. It's going to be easier for us. So we did think about running our exchange as a set of payment channels, and we did this long before we considered it even long before Lightning was announced. This was a few years ago when payment channels were just out. The issue with the even today with Lightning Network is that the technology is great, but economically it's not possible for us to fund everyone's channel and predict accurately how much money anyone will take out. And this is an operations research problem, and what we want to do is maybe make an improvement to Lightning Network. So there are about 3 risks, right? 3 risks from our point of view. One is the malleability, which segwit will fix. And second is the fact that you never know what the fee will be when you want to close the channel. So you actually don't know if you can properly close it. There is no way to add fees later, right? Because you have to open a channel with a certain amount of money. And the third, the most important issue is, of course, that we don't know how much money. So it costs us a lot of capital. We have to find, even if we fund every channel with a median amount of expected withdrawal, that means half the channels will have less money than needed. This can be fixed by adding another instruction to Bitcoin, which is pay to unspent output. And what that would do is it will allow you to add add value to an existing output, so that you can close the channel. If you think the fees are too low now, you just add it to the output that opened the channel, and now you got the fees. I can open, as an exchange, I can open channels to everyone with the funding it with 0, and when you want to withdraw, I can add the exact amount that you want to withdraw to that output, and then it would be without fees. Essentially, it's feeless, right? So if we can do that, then we can make this very fast. It's Lightning is pretty much there's no confirmation. We just settle the channel once in a while, and if you can add output, you don't have to close the channel every day. You can keep it open for a year if you want, because you have the confidence that if you need more fees, you can just add it at any time. So I think this change is needed to make Lightning networks economically feasible. They're technically feasible now, but at least for the exchange use case, it's not yet economically feasible.
So either way, the model, the decentralized model is going to end up being fine.
Yes. So decentralization is about control. What we want to do is, we don't want to be the entity that the governments want to crush, or the entity that will fail and prevent you from trading. And that is the issue right now. If you see the history of Bitcoin exchanges, failure occurs when the exchange grows too large due to various reasons. Bitcoinica is the top exchange when it failed. Mt. Gox was the top exchange when it failed. When the Bitfinex hack, when it was a top exchange. Bitstamp, when it was a top exchange. And looks like this was one of the reasons when we designed it. We said we have to absolutely put this in the foundations. If we cannot build an exchange that is highly resistant to failure, we should just not build it. We should just do something else. And we investigated if it was possible. And we believe this was the best way, is to not hold the funds as far as possible. Because it's just the centralization of funds is what is causing most of the problems, right? The centralization of information, every trader's information, is what causes problems. When you hold everything, it is just a big burden, and you are a target. You open your palm, let everything out to everyone else, then you're less of a target. So that is essentially the goal. And so eventually we will be just makers of software, and people will either run it from their browser, which would be ideal. You would just load a page and run it from your browser, or you download something and start trading. But the key is, unless we have a good user experience, it doesn't matter how cool cryptographically it is. Nobody's going to use it. And no trader is going to say, oh yeah, I put in an order and 3 seconds later I know if the order actually went through. It's just not going to fly. So we have to make it under half a second. And until then, we are giving everything else. We are giving things that are better than what the market is showing right now.
So the way that the exchange currently is, if someone has a deposit on there, and as long as it's not in the margin account, but it's just on their user account, even if Coinpit dies and the co-founders get arrested and kidnapped by the government, then you can still get your money from the exchange with this pre-generated raw transaction, right? Can you explain what exactly that's about? How people can do that?
Right. So every operation you do, every financial operation you do on the website is signed with your private key. And for when moving coins from your multisig, the exchange needs to sign as well, because it's a 2 of 2 multi-signature. Now, what this gives you the assurance that coins cannot move out without a signature, but unfortunately, it also means that coins cannot move without the exchange signature, and that is not ideal from the trader's point of view. So what we do is every time there's a change in your margin account, in your multisig account, you can generate a pre-signed transaction. So that will have the signature of both the exchange. The exchange will sign its half of the signature. It will come to your browser. Your key will sign its half of the signature, and that is stored as a raw transaction. It's already pre-signed. You don't have to worry about loading Electrum and signing it or anything. It's ready for you. You just go into Blocker or BlockCypher or blockchain.info and just broadcast it, and that money will move into the Bitcoin address represented by your private key. So and you can try it on testnet if you want, see how it works, and get very comfortable with it. And in case Coinpit goes down or something bad happens, your coins, that's the first thing we want, is we want you to be confident that your coins will not be lost, right? So what I think keeps crypto volume still is very small compared to the traditional volume, despite all the volatility here, right? Because it's inherently risky to store money in an exchange. I, for one, have never been confident to put more than a couple of Bitcoin in any of these exchanges, because from the days of Bitcoinica, I knew that this is just going to happen, and I know many of you spread it across 5 exchanges and just hope that that way not everything is lost. So we don't want to do that. We want you to have access to all your coins. The coins that are covering a trade, unfortunately, you cannot be in control of it by the definition of it being in a trade. But once the trade is complete, once you booked your profit, once you're done trading for a short, you're trading a period, which could be a day or whatever, you can move it out. So it's no longer in the control of the exchange. And that way, anything happens, it is not a disaster, right? If you have a couple of open positions, there may be some coins covering it, but most of your coins are always in your control.
And how do you keep the exchange keys secured? Because if, let's say that there's the exchange gets really big, there's lots and lots of traders that have large positions open with one another, and a lot of BTC set aside in the margin. I guess the users don't have any access to it, and as long only the exchange has access to it, their keys. So how well are you guarding the keys that has access to those margin segregated funds?
So what is going to happen when we launch the hardware support is that we'll also have hardware support for the backend. So the coins will be stored on so what we plan to do, this may change due to technical constraints, but I'm telling you what our plans are right now. The software will have a key, but that key won't be able to move anything on its own. So you would need either a hardware key from the user, or you would need a hardware settlement key. So right now, on our exchange, coins can only move from margin accounts to other margin accounts during a settlement, and that is a very special transaction that's easily recognizable. It's a coin join transaction with one output being the exchange's commission, exchange's fees, and the other being an OP return. And the content of that can be verified cryptographically. So we are crypto sure that a certain transaction is a settlement transaction. So the coins can only move in from certain places to certain places. So from your margin address, coins can only move to a settlement, or it can move back to your multisig. It cannot move anywhere else. If it does, we would know it in 1 second. Okay, we would know it immediately. So it is very hard for someone to do this without being noticed. Now, when we are going to have a hardware key on the server side, since for you to move your coins from your margin to your multisig, you use your hardware key, and to do the settlement, we use our hardware key. There is no way, even if the exchange is hacked or anything happens, the person who gains access to their server is able to move coins. They would have to either compromise the server, they would have to find where the hardware key is, they would have to physically break into a fortified data center with guard dogs and walls, and then they have to know which server, and they have to find the hardware key and remove it. And even if they remove it after 3 wrong pins, it will just stop working, right? It will just erase itself. Or they have to find a big user with a lot of coins here. They have to go to his residence or his place of work, find his hardware key in addition to the key on the server. So the key on the server is just software. It doesn't actually do much. The actual movement of coins is always using hardware keys. So that is what is going to happen in a couple of months when we have that feature.
Okay, so that's in the couple of months, but the current margin account is not a multi-sig address, right? It's got a 1 in the beginning of the address. So what's the current practices if people are going to jump over there and trade today?
So yes, currently those addresses are stored in our database, and it's a hot wallet right now.
But these are all divided up into different different accounts for each user, right? So, but then the database then has a live hot wallet that's having access to all of the trading, actively positioned Bitcoin on the exchange.
That is correct.
Because what Phoenix did after they got hacked, they had this BitGo hot wallet system, and their big lesson that they said they learned from it is that don't deviate from what works, which is the cold storage method, and that so now they keep, I think, like 95% or whatever of customer funds in cold storage and minimize the amount that's hot. So that's one of the tried and true methods has always been keeping coins in cold storage.
Yeah, and we can certainly do that as well when we see that there are a lot more deposits than withdrawals. When we see that ratio change, we can also move things into hash locked time contracts. There's a lot of things we can do to prevent to minimize risk even further. In a couple of months we're going to have the hardware support for it. So I'm not that worried about it. We're not big enough to be a target. We have very high security in terms of penetration testing, and so for example, our servers, our web servers, they run on machines that don't even have a shell. So even if you find a memory buffer overflow, you wouldn't be able to get a shell because there's no shell runs there, right? So we have done a whole bunch of things regarding security. I try to analyze it from every point of attack, and we've tried to minimize risk for the coins as much as possible, because this really is the one thing that will kill every exchange. It's as if every exchange is born, it grows big, loses its coins and dies. This is the story of every exchange, and we want to change that story to make it, and one of the reasons, one of the ways we realize is what should grow big is the exchange and volume, but not the coins you hold. And we will, our goal is to eventually hold less and less and less, and that way, we're going to de-risk the custodial risk of holding all coins.
Okay, so I mean, you've talked a lot already about the technicals, the security and everything like that. But let's talk a little bit about the actual orders and how the exchange functions when you're trading with it, right? So so some people are trading on cross margin, and some people trade with like isolated or fixed margin in positions. You actually let people like have multiple fixed positions that are set. You can like merge the positions. You can divide the positions up into different. So can you tell a little bit about how this order system works?
Right. So we have very, at least from the Bitcoin world, we have advanced position management. You can have both cross and fixed at the same time. As far as I know, there's no other exchange that lets you do that. We will soon also have long and short simultaneously. So this will be the only exchange which is simultaneous long and short, cross and fixed. And why would you want something like this? So a lot of people like to hold Bitcoin for the long term, and but sometimes it just gets so crazy, it just goes parabolic, and you want to take some profit, or you are afraid that it is going to go down for a while. So it would be nice if you could hold your long position as a cross order, and you could trade against yourself on a fixed position. So this is why you need both long and short, both cross and fixed. So this way you also make money with the high volatility, but you don't lose the long-term benefits. My exchange is Coinpit. It's actually live. The Swapman put the link right there. Yeah, so you can do that all with the position. And I know that a lot of traders like to say, you entered with 10 contracts and things are going good. You want to sell 2. You want to just sell 2, and after a while you may, based on how it moves, you may want to sell 8 instead. So we let you split the position, and you can split it into 8 and 2 or 5 and 5, whatever you want. Keep one and you can close the other, right? Or let's say you entered over a period of time, you entered 1 contract each. Every time it dips down, you just keep on adding, and now you have like 10 fixed positions. You want to just consolidate it. You can just select all and just say merge, and you have 1 position. So it is easier to to map the number of positions to how you actually think in terms of the trade, rather than just how you enter the trade.
So the stops, because you don't have any socialized losses, and there's no insurance fund that I can see. So you do you just, I guess, terminate the losing position. But how does the stop work? Like,
Yes.
as I understand it, when you have the stop set, like if you're long at I don't know, $1,200 and you set the stop at 1190, then you can't lose more than that. The stop doesn't slip down to based on the market. It just terminates if there's a problem.
Yeah, so our stops are sort of a hybrid between a stop order and a liquidation mechanism. The stops are atomic, which means that once the stop is in case any of you know, so you guys are probably aware, but let me just tell you how most exchanges do it. When you place a stop order, they put it on a different book. So you have a limit order book and you have a stop order book. And once a trade executes on the limit order book, there's a process that signals the stop order book, and it looks up all the triggered stops and moves them and puts them in the limit order book. And these steps happen asynchronously, and during this time the price can move. And when a price moves very fast, like if you see the spikes on the wicks on OKCoin, what happens is the stop is triggered, you get a terrible fill, because by the time your order comes in here, the market has moved a lot, and you get the terrible fill and the market just pops back up, and now you are actually in a loss. So we don't want that. So as a trader, I always hated that. When I used to trade oil, CL contract, and CL was very famous for doing this. It would it would stop you out on both sides, and it would wipe out like a whole week's worth of profits. So I wanted stocks that would work, that they would guarantee, you would have a guaranteed loss. So when you put a stop on Coinpit, it's atomic, which means that it will trigger right at the moment a limit order fills at that point, and the stop will be executed before other limit orders. So what this does is it gives you a guarantee that when your stop hits, you won't lose any more than that. Now, because of to accommodate a market that moves very fast, there is a little bit of cushion of margin you need to add in there. So this means in reality, the stop will fill at worst another 10 ticks. Usually it's a lot less. When there's liquidity, it actually never slips at all. So when there's low liquidity, which we have had in last, like in January, and now we had low liquidity, you can get slippage. You can get, but it doesn't slip beyond your cushion. What happens is a party on the opposing side. So if you're long, party that's short will get their contract terminated at a profit. So this is sort of like what BitMEX does. But when there's liquidity, what we have seen ever since we launched, we've not had a single termination of traders' contract. Only the market maker would see terminations.
And that works also if you're in profit. So if you're long at 1100 and you want to set your stop in profit, like I know a lot of traders like that, then you're not going to then have a whipsaw down that screws you over. You will be ensured that you don't lose more than that cushion you save. And I guess 10 ticks is $1. So whatever stop is minus $1 is the rock bottom that it goes.
Yeah. So this is a very good feature. Let's say you entered at $1,000 and the price is moved to 1,200. You can move your stop all the way up, and even if there's a fast wick down that goes beyond your enterprise, so what would be a liquidation price on other exchanges, you would only lose wherever you tighten your stop. And not only that, that margin is released for other trades. So let's say you entered at 1,000, let's say you put one Bitcoin as a margin, the price went up to 1,200, you move your stop to 1,190, that additional profit, that's additional margin, you can use for other trades.
That's really cool. So that means when you're profiting in any way on the exchange, you don't have to wait in order to pull the funds out, or how quickly is it available for a profitable trader who wants to get out their profits?
Right. So right now we do settlements once a week. So you have to wait a week. We actually used to have hourly settlements. And what we're going to do, the moment the volume picks up a little, we'll have daily settlements, and if the volume gets really good, we'll have hourly settlements. So once you're in profit, within an hour or so, you should be able to withdraw your money. So right now you have to wait till Friday. That's when the settlement is. Once the volume, we expect it to be daily very soon, and eventually it will be hourly.
Okay, so and that's because the fees to move everything that happens, all the settlement occurs on chain, and that becomes costly if the higher frequency then is performed.
Yes. Also, we don't want to create so many transactions that they fill the mempool, and it's already a issue. So we want to do it only when it's needed.
Yeah, it would be good to have like a countdown to the settlement then, so people know when, because otherwise, right now there's nothing indicated in the documentation. If someone's just like, oh, how do I get the money? It's unclear in the contract specs. So there would be also, since you could update the fees, that would be good to put in for settlement time.
Well, we do have a countdown for delivery, and the moment the delivery is done, the settlement also is done. So the settlement countdown and delivery countdown is the same.
Currently it's the same, right? But then once it becomes every day or every hour, then it's not synchronized with the delivery date, right?
Yeah, then we will add that definitely.
Yeah, are there any other aspects of the exchange you think traders would want to know about?
I mean, there's a lot.
The leverage, how much leverage can traders use?
So right now we have 100x on our April 28th contract. We will test higher leverages. We can actually offer very high leverage. We used to offer 500x, and it's just harder in a low liquidity situation. But once there's good liquidity, we can offer a lot more. And the reason is we, because of the way we have stops and we have mandatory stops, we can measure everyone's risk very accurately, and we can give you the highest possible leverage. So in case you guys are not aware, what the exchanges do when they offer leverages is essentially they're doing risk management, and they hope to catch your position the moment it goes beyond a point that is bad for them. And what they do is it goes beyond your position, beyond the liquidation price. Sometimes if you just gap down. So they have an exchange user who takes over your position, and the job of that user is to accumulate losses. And then when there's this, so that's how you get liquidated. That's how, and then if there's not enough profit to offset the losses, you get you get ADL, or you get clawback. And we wanted to get away from all of this. This is just this is something that can be measured very precisely if you have stops. So we don't have an exchange user. We don't have anyone who takes over your position. When we liquidate, we cannot just say there was a price that, well, it was for a quarter of a second, you didn't see it, sorry, you are liquidated. That's why we have stops, because the stops will print a trade. And in case there is an inquiry, we can actually trace it to the counterparty who traded, all the way to the signature of their order, and to prove to you that the exchange did not actually screw you over. There's always a fear when you have these liquidations like this, especially high leverages. You look at the mark price, it looks like it's somewhere far away. Suddenly, boom, you're liquidated, and you're wondering why. You're wondering if the exchange is, sort of forcing it and skimming you. There's all kinds of possibilities in the crypto world. So we wanted to move away from that, because that kind of uncertainty, when things go wrong, it's natural to be suspicious. We wanted it to be provable that everything is fair and executed properly. So if there's a trade printed at the price, and if the trades come from users whose digital signatures are attached to their orders, and we can do a complete trace and demonstrate that the trade was accurate and fair.
Yeah, that's good, because at least on BitMEX, a lot of people here have run into issues where they set stops based on last price, mark price, index price, this and that. No matter what way they end up trying to set it, it's to run, and they get fucked. And people would like to be able to just set their stops and know that the stop is the law.
Yeah, stop is the law is a good slogan. I think we're gonna steal that.
But so right now you're only trading BTC USD weekly and bi-weekly.
And we are working with the market maker, and we may be able to list a lot more coins. We certainly want to list all the popular altcoins. And you guys tell us what you're interested in trading. If you tell us you want to trade, oil and gold, we can list that as well. It's just a matter of making the deals, finding the market makers. And alts are easy to list. We can list it at high leverage. Alts have enough volatility as it is. But yeah, that's not very hard. You just need to find a market maker that wants to make a market on those alts.
Yeah, I think a lot of people like to trade. The most popular contract, for example, on OKCoin is their quarterly contract, and BitMEX, their only futures they have is the quarterly versus their perpetual. So I think there's some people that like to have a bit longer time out sometimes to trade. So, but I know quarterlies then introduces some issues with. It's a lot more time for a premium or a discount built in, and it gets more difficult for market makers to quote, I guess.
Yeah, quarterlies is not simple to market make.
Yeah, but so are there any other things you want traders to know? I mean, it's working right now. I've been playing with it. Know a couple of other people have been playing with it too. And so the platform's great. There's enough liquidity there for small trades. Is there anything you would like traders to know?
Well, I mean, I don't want to keep talking about the exchange. So there's we are going to put out a lot of information soon on our doc site. We've been just building the exchange most of the time. We've not invested enough in documentation. So we'll explain everything there is to explain: the contracts, the fees, how all the stocks work. We'll also come out with our plans. We have a draft white paper about our exchange. We're going to release that as well. You may already know about our median index, which has seen a lot of we have seen failures with the Bitfinex crashing and GDAX a few times. The Coinpit index has remained very stable, and it has. So we have designed everything from ground up. We have done this in the spirit of Bitcoin. We have made it foundationally secure. We can move data centers without the exchange stopping. We upgraded the network without the exchange stopping. Traders have been trading; they won't even know. So we have done this so that everything is in place for it to be decentralized, for it to have a high level of performance and high level of privacy. So I am actually always on. I'm always ready to come on Teamspeak. Just tell Swapman to get me. Anything you want to know, any features you want to add, we'll look into that.
One guy before mentioned the troll box. He said that's all you guys were missing was a troll box.
So we have a Telegram group Telegram where traders can talk. We can do a troll box, but troll boxes, if they're not done correctly, they can be a source of certain type of attacks. You can do it through iframe and all that, and it won't have the same experience. We will be essentially we'll be redoing Telegram, but we do have a plan to have our users send messages to each other, even send sort of emails to each other using their user ID, which is a Bitcoin address, as identification, and it would be completely asymmetrically encrypted, so that only the other person can read it. And the reason we wanted to do that originally is that is how we wanted to send everyone their recovery transaction every time their balance changes. So we actually have a lot of features. I'm not able to go through all of them right now. But we are going to do, this. I mean, you are the traders, you are the customer. So if you want something badly, of course we'll do it.
I want negative maker fees. I want to get paid to be a maker.
if you put enough liquidity, we can. I'm sure we can get in there.
Oh wow. I'm not that good. All right, well, never mind. But it'd be nice. I mean, I like the idea. I like the whole idea. I like the concept. I like the focus. I like everything you're saying. And I'm okay to deal with, like, you know, less trade action and, you know, whatever. And to add liquidity, but I literally get paid to add liquidity at BitMEX.
Okay,
That
point
sucks.
taken. We will certainly look at that.
So that's my only
Until
thing.
you guys are developed, probably just say 0 fees. Like, you guys aren't buying Maseratis right now with the fees you earn, so you might as well just make it 0 and get everyone on board, and then charge them.
That's a great idea too. We could go 0 for 2017, something like that. The only issue is we pay for the settlement through the commission, so we have to charge some minuscule amount, or we won't be able to settle. Or we could charge a fixed settlement fee. So every week you pay a fixed fee of a very tiny fractional amount, enough to move.
Yeah, I would be happy with that.
Yeah, I mean, people didn't really anticipate so much that China would get so screwed up, and OKCoin.com futures is actually really fucked up now because half of their index is China, and their volume has gone completely to shit. BitMEX is almost neck and neck with OKCoin.com in terms of volume, not because BitMEX is, I mean, partly because BitMEX is doing really well, they are, but also more that OKCoin.com has just fallen off a cliff, and you know, we need to have multiple exchanges to trade at, because you never know what's coming around the corner. You never know when the current leaders and the current guys that are doing awesome, some awful thing happens, and we need to have backup. So we need to be able to pivot and trade somewhere else. So it's good to support and trade on multiple exchanges.
Yeah, we will work on actually going to a small fixed settlement fee, so that no matter how much you trade, you pay a fixed amount, and I think that's a good idea. And I think I agree with you that I think any exchange that is semi-regulated is always at risk. And so, of course, OKCoin is in China, so the Chinese are afraid of their currency losing its whatever they're worried about. But ultimately we have to go to a true decentralized solution, and with your support we can get there. So we can, if we can show demand that users are interested in these features, they are interested in privacy, they are interested in security, they are interested in decentralization, then it's easy for us to either raise money or do whatever to make it happen, right? So I try to sell this to everyone, and people, they say, well, you don't have users.
What are you doing, Marty?
I knew I should have hedged this shit. This is fucking crap.
So what jurisdiction is your organization / servers based out of?
So the exchange is based out of Seychelles, same as BitMEX. We are essentially neighbors, I suppose.
Cool.
You guys share HUD?
And where are your servers based out of? Like, do you use like AWS or what's going on?
No, we have dedicated servers in France, Netherlands, Italy, and we used to have servers in Luxembourg as well.
Are these dedicated or co-located servers?
They are dedicated. We lease dedicated servers.
All right.
So the reason we have to use, there's a few reasons. One is, if you guys remember the Linode hack of Bitcoinica, the admin, he got admin, he's admin of the cloud. So he went into Bitcoinica's VM and he got keys out, or got some information out. what you can do as an admin is you can snapshot a VM, and inside the VM you won't even know. So Amazon, of course, like many reputable organizations, has a ticketing system. You're not supposed to access it without a ticket. But everyone who's worked in this place, if you work in security, you know that if there's $70 million, this rule is going to be broken. Now with a dedicated server, no one can do anything to it without you being able to detect it. So that is one. The second is when you have a dedicated server, you can plug in a key into it, a hardware key into it. If it's just a virtual machine, where are you going to put the key, right? So it's harder to control. And so even though we are dedicated servers right now, we can easily move to a cloud model. The only thing that would be compromised is that somebody can snapshot the VM.
Do you have like a dongle plugged into your server, like USB key?
We're going to have something like so Ledger has a hardware wallet that is that can run in server mode. So we'll be plugging that into one of our servers.
This isn't a dedicated like a data center, so I imagine, like, I've worked in a data center, so this is, and we've had, but I just want to point out that people like me walk through those aisles and very physically touch those servers and stuff.
Right, but even if they take it out, so we would have to get a cage, and even if someone does pull it out because they know this server belongs to this exchange, we would detect it, right? And they wouldn't be able to use it because after 3 wrong pins, the server erases itself. The hardware key erases itself. And I think in server mode, if you pull it out, it just erases itself.
But if you consider that part of your security policy, you may want to consider getting co-located servers, so you have physical control of those racks.
Yes, we will look into that. Thank you. How long will withdrawals take? It's Saturday, Friday. You can withdraw if you have. So if there is any money that is in your margin account, you can withdraw immediately. It's your P&L that is settled weekly, and eventually, once volume increases even a little bit, so that it's not expensive for the transactions, we will settle every day. And the withdrawal is instant. So you go to the web page and you say withdraw, and it withdraws. There is no, there's no waiting for 1 p.m. the next day.
Yeah, but that's good. The reason you at the first time, the first reason you were coming on was because of Bob and his fees. He was trying to figure out what the fees were, and that seems to be addressed.
Fees. Yeah, thanks for coming on. I love what you guys do. I love you seem to take it, you personally seem to take it very seriously and seem to be very knowledgeable on the subject, so